Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 20th of October. All right, some tricky trading at the moment with the US Treasury yields charging to the top side. And actually, they've really kicked in even in the last sort of 20, 30 minutes. Equity markets, well, they're going up as well, right? So the bond yields going up. That's like interest rates going up. So with that, Treasury yields should be going down, right? So there's a clear disconnection between the different financial markets at the moment. And that is creating, if anything, or flipping upside down the normal price action that you would experience on the dollar, right? Treasury yields up, should be going up, but with equities going up as well, we're seeing the dollar getting hit and the dollar block, okay, euro, sterling, Aussie, Kiwi going up, right? So I actually can't see that changing until the Treasury yields and the equities start behaving as they should in relation to each other, right? If you have a look at the currency pairs, I mean, I've just overlaid one thing just to give you a bit of an idea of what's going on. So we've got these counterintuitive moves against the US fundamentals, right? It's like the US numbers and the tapering of the asset purchases by the Fed was such a given. The whole market's got themselves long dollars. Now it's a massive squeeze to the top side, right? Just on the Kiwi here, I've overlaid the US 10 years. You can sort of see how it's not exactly correlating the whole time, but it is a driving force behind this. Is this the major correlation that's driving this thing higher? I don't know, but I tell you what, it does match up with what's going on in the bonds. US bonds are going up. Usually the US dollar would go up, but it's not, right? So recognize what is driving the market and why, right? Sometimes you just don't need to know why, you just need to know what is driving it, right? Because if you think too deep about why things are happening, logically, it doesn't make a lot of sense. But financial markets will go where they need to. They go to the sore point, right? Or the weak point. The weak point here is the market's massively long dollars because they had to be, because the Fed's told them all these things, the data's stronger, all the fundamentals in the US are strong, but the dollar's falling because the whole global market's long dollars, right? So it's one of those kooky things that you can see. The dollar index is still sort of hanging in there on the top side. Like, check out the price action here in dollar Swiss. That's like a bloodbath. There's two pairs that are trending quite well, amazingly, dollar yen and dollar CAD, right? And they are moving with a negative dollar outlook, which once again doesn't really line up with the way the dollar should be behaving against those US treasuries, but that's what's happening. So respect what's happening. Don't try and pick tops. Don't try and pick tops in the I was going to say in the dollar block, right? If anything, look to get long. It makes sense. And don't look to pick bottoms in the dollar pairs, right? As in like dollar CAD's come so far, I can't get short. I'll just go long, right? Because it's or actually short, I should say. And that's the way of it at the moment. This is the third week of the month. We've had all the big data out on the table. The market is massively long dollars. They are getting squeezed out globally. When will it turn? Well, I don't know, but you're looking for those levels for where it breaks back down. At the moment, the like situations that you wouldn't normally look at. So I'm thinking, well, if the treasury yields keep going up, that means the dollar is going to continue to fall. So in that sense, today's UK CPI numbers, if they're strong and the treasury yields rally, well, that's going to give me a double whammy topside move in sterling, right? May seem weird if you knew too much about the market, but that's the way the currencies are moving. So respect it, maybe take some cash out of the market. It's hard to stay in those trades a long time, but there is cash in them, right? So make sure you go through your calendar, work out where the highlights and the lowlights are. To me, the CPI, the Canadian CPI numbers are probably key, okay? It makes a bit more sense about what's going on. And you get a situation here where the treasury yields go up. This is like a perfect trade setup for me today. Treasury yields go up. We get really strong inflation numbers here in Canada, right? That is a double whammy for the downside move. We've got oil rallying as well. That would really contribute to a lower dollar CAD, and I'd be happy to get into that trade. That's probably the major focus for me coming into today. All right, guys, that's it from me. It is a little bit kooky. Work with it. Be dynamic with the structure of what's happening. and most importantly, respect your risk management. All right, guys, have a good one. Cheerio.